All right, hope everyone's having a great day today. Uh, Fair warning, my microphone is messed up on my laptop, so I'm using headphones, and I'm sure they're fairly loud. Uh, it's a Bluetooth headset, and well, the microphone's right to my neck, so it's probably pretty loud. So if you're wearing headphones, I would keep it, as low as possible because I don't want to hurt your ear. All right, anyways. So, and with that said, I'll get just a portable mic for my laptop at some point here in the next day or so. Anyways, wanted to get back in the habit of making more videos. So, looking at today, first thing we notice is we've had an expanding triangle. First push, second, third. We've had a breakout last Friday, and this is the follow-through, but as you can see, it's not great follow-through. Very small bull body. Monthly chart, getting a bull breakout. 5 consecutive bull bars. First reversal down will fail, probably at least a little more up. Weekly chart, breakout, getting follow-through. First reversal down should fail at best. Bears will need a micro double bottom because the bulls will buy the first reversal down. 60-minute chart, really the same thing. Maybe measured moves based on, probably not that, but anyways. So yesterday, great example of a small pullback trend day. Here, show the session breaks. So anyways, once you get to these 3 consecutive bull bars at 850, well, okay, so sorry again, I know it's loud. Once you get these 3 bull bars up to 850, you have a gap up. You always have to consider the possibility of a trend from the open bull, and definitely I'd be out of shorts. So if I was trading this, and this is what I did that day, just be long, put your stop below this bar, and hold. You have to remember this is a spike on a 15-minute chart or above, so the first reversal down is probably going to fail. And even if it gets to the moving average, what's going to happen? It's probably going to find buyers because that would be the first time the bulls were able to buy a cheaper price, a value price, such as here. So anyways, small pullback bull. It's important to notice how hard it is for the bears to make money. You sell, look right here. Even if you sold this high during this breakout, you had to scale in higher, you barely made money, But then again, here, if you sell this high, you're trapped if you scaled in higher, so it's really not easy. You can make a lot of money if you stay long. And, really not a whole lot to say on a day like today. For this day, we're trending up, starting to go sideways, but buyers at the moving average, so keep it, buy, stop down here. Like I said, we're still going up. Here's a breakout, but you have to question once we start to get this, and especially once we start to get this. Here's a high 1 buy, maybe a high 2 buy after this, but this would be, I'd consider this a high 1, new high, breakout, pullback, so high 1. We went sideways for a very long time, so you have to think about the possibility of a final flag. So, it's really not, I think price will fall below this high because trends evolve to trading ranges. This is a trend. We should find sellers above and start closing gaps. So anyone who sells here, sells below here will probably make money. You can see that they sold here. Well, it's not really a great representation of what I'm talking about. But anyways, we sold off into the close. If I was holding long, I'd get out probably below this bar, maybe above this bar, somewhere in here. If I didn't get out here, I'd hope I'd get out maybe here. But it's okay to hold into the close. It never went clearly always in short, so it's okay to hold long. All right, today we were trying to get follow through from Friday's breakout here. And as you can see, very big bar, so big risk. And if you were paying attention to Al, he even said 30% chance that today will be a trend from the open, and a trend from the open, and that this will be the low of the day. So that means 60 to 70% chance we fall below the low of bar 1. So it's reasonable to buy above. It's always in long, so it's okay to buy above this bar, stop at the low of the day. But then you have to be disappointed by bar 2. It's follow through, but it looks like a trading range bar. It's a reversal attempt. Once you get to bar 4 at 850, you have to consider the breakout and the reversal attempt. So every breakout has a reversal attempt at some point, and that reversal attempt either leads to a pullback or a reversal. So what I mean, here's an easy example. Here's a breakout. Here's a reversal attempt that led to a pullback. Here's a breakout. Here's a reversal attempt that succeeded, but ultimately it led to a pullback. The pullback just fell. It went below support. So, you have to understand this is a trading range. So trading ranges will fall below support and go above resistance and usually continue doing what they were doing. So what do I mean? What I mean is, it's okay to buy above here, get out here, maybe get out below here or on this close and wait. I think whether or not a bull got out anywhere in here or got stopped out here, they'll buy again up here and they'll obviously make more than they lost. The worst thing you can do is buy, sell, and maybe buy, or maybe you buy, then you get out, you short, or you buy above. It's a trading range. It never went clearly always in short for swing traders, so the issue is, in my opinion, do you stay long or do you get out and wait to buy? You can see, here's a gap from the daily chart. I'll kind of zoom in for y'all. This is that low we're talking about. The high of yesterday, or high of Friday, was 25.5. And you can see 25.5 is right here. Went one tick below, turned up. So this is a pattern that happens a lot. You have a gap up, so the odds favor a bull trend more than a bear trend. And, a lot of times you'll get a reasonable bar, and it traps traders out. What I mean by that is you buy above it, either get out here or maybe you get out here and you find buyers. And that's what trading ranges are notorious for doing. I want to show you a day that Al mentioned that was comparable to today, and he said it during the day, and that is the 23rd of June. Gap up, we had a pullback, a test of the gap, and a breakout. And, it's comparable because, it's comparable because of the deep pullback. You see, although it's a trading range, you have to understand it has not gone below the moving average. The moving average is rising, and arguably, this is simply a pullback, or you had a breakout and this was a pullback and we channeled up. But there's an issue, and this is why the 23rd, which is this day, is comparable to today. When you get a trading range on the open and a breakout, usually the gap will close. That's what makes a trending trading range day. So you have a trading range, a breakout, and then the market decides on trend reversal, trend resumption. Ultimately, we got trend resumption on this day. So looking at today, by the way, just for future reference, kind of something fun to see. If I can find it, there it is. Here's another example. This was the 24th, that crazy day when the Brexit the Brexit vote, the day after the Brexit vote. Large gap down, very strong bull bar, strong reversal attempt, probably a little more up. And you can see we kind of had a wedge, 1 push, 2 push, 3, or maybe 1, 2, 3. Anyways, it's just a pullback to the moving average. So if you're long, you need to get out because it's just a pullback to the moving average. I'll explain that in a minute. What is this? This is a pullback to the moving average. You have to remember, this is all one move. So if I flip to the cash index, excuse me, look what happened. Look right here. This is this is the gap. Arguably some people will say that it was just from here, and here's the bottom of the move, and this is just a 50% pullback. So you have to understand, and it's a wedge, first push, second push, third. So, and this kind of paints an easier picture maybe to see. Bulls will buy this close, buy more down here, get out here. Let me go back to the Emini and explain better what I'm talking about. I'm going to remove the session break here. So let's say you're a bull and you buy this close. Well, strong traders, I hesitate to use the word smart traders because it's, before I say that, the math is okay to buy here, get out here, and then buy again. That's perfectly fine. It's even better if you buy here, get out here, and double your position. But, a lot of traders will buy here, buy more here. So, in other words, they'll buy this close, buy more on the breakout, and use a stop down here. And really, whether or not they buy here and get out below here, anywhere in here, it doesn't matter. The whole point is traders will see this as a pullback. They'll see this sell-off as a pullback. You have to understand. Look right here. Look at these two bear bars. Why don't we get a breakout similar to that on the open? Notice we got two bear bars, bull bar, bull bar, bear bar, bull bar, and a bear bar. It's a wedge. First push, second push, third. And also, what happened here? If you think about what happened, it looks like such a strong bar, but yes, it's within a trading range. And, why were there so many sellers? Well, for one, bulls will buy this close, 30.50, scaling lower to 28. So they'll buy basically 2 points lower, and they'll scalp out at the original entry. Other traders will buy this low at 30.25 and scaling lower. And you can see scaled in 2 points lower, scalped out. So anyways, another thing to note is it happened, it's the same thing with here. So we have a bull trend always in long. If you can buy here, put a stop down here. The market immediately reversed down really sharp. It's okay to get out, but if you do, you've got to get back in. And but I will say, if you're short, if you're looking to sell, don't sell here. And if you do sell here, you have to get out. The reason why I say don't sell is because this is right at the moving average where bulls are going to buy and try to make a pullback. There was a different day I wanted to show the pain. Here it is. This is more of what I'm talking about, and this is more of today. We had a sell-off. It's always in short. Bears will sell below here. And if you're trading always in, there's no reason to get out above this bar. It's not a good buy signal bar, so it's better to stay short. Well, this bar quickly reversed up. And, it's very easy to exit a short and buy and get long and put your stop down here and get stopped out. Well, what you have to understand is bears will sell the moving average every chance they get. And you have to think that bears are trapped. So number one, a lot of bears are still in. They did not get out above here, or there was no good signal bar to get out. So here, a lot of bears will get out above this bar, or maybe this close, betting on, it's a second leg, it's a double bottom, maybe we'll test up here. We just went down vacuumed up. So a lot of traders will just hold short, stop up here, bet on a new low, which is what we got. So my whole point is, if you're short and you get trapped here, I would hold. I personally would not get out above one tick above the bar. It's very big risk for the bulls, which means there's probably sellers above. So just, if you're still short, put your stop up here and hold. And you can see that's what happened here. This is kind of one of those interesting situations. And I have to admit, I actually made a mistake. One big mistake I made today was I ended up, I bought above here, got out below this bar, and bought above again, and got stopped out here. And then I went long on one of these bars, I don't remember which. I say it's a mistake because, well, for a couple reasons. Number one, remember earlier when I said 30% chance this is the low of the day? Well, all that simply means is we could go a few ticks below and turn up, and mission accomplished. It's not the low of the day. And we have the moving average. Now, scroll back on many days and look what when you get a gap, look what happens at the moving average. Gap down, moving average, found sellers. And here's another example. So bulls buy here, stop down here, they get stopped out and they buy again. Or bulls buy here and use a wide stop, ideally that, which is pretty far down. And they'll say, okay, breakout, bad follow through, breakout. I'm going to hold long, or whether or not you're long here, I'll buy this close and I'm going to see what the next bar is. Maybe if the next bar is a strong bear bar, I'll exit. And you can see the bears needed maybe one more large bear bar and failed, so bulls will buy it. That's why it's important. You have to understand, just because we fall below I want to back up. Trading ranges are, they fall below support and they rise above resistance and turn down. So here, we broke above the high of the day, turned down, broke below the low of the day, turned up. Eventually you'll get a breakout. So what's the characteristic? How do you tell when the day's changed? Well, one way is consecutive bars. Notice the selling pressure. The bars are getting smaller on the way down. The bars are getting arguably bigger on the way up. You have to ask, is this a breakout and then a reversal, or is this a breakout pullback? You have to remember, just because price falls below a breakout doesn't mean the breakout failed. It always depends on what's below the bar. So right here, well, I don't like that. Hang on. This may be a long video, but I'm trying to bring home a point, and that is here. Bear breakout, vacuum to the moving average, probably will get a deep pullback, and look what happened right here. Arguably, traders put their stop one tick above, they get stopped out, price continues down. And the moving average. Bear breakout, so always in short. We test the moving average, found sellers, and we didn't. So, and again, this video is kind of all over the place simply because I have a lot of thoughts to share, and I'm not going to make 10 videos over my thoughts right now. But one way to, here's always the issue when you get a gap down in a bear trend, especially when you have a bear channel. When will the channel end? On a day like today, it's musical chairs as to when the channel ends. And one of the issues is, so right here, bears sell every moving average. They sell every test of the moving average. When will they stop selling? So bear breakout, probably second leg down. This is probably not the second leg. Minor reversal, probably need a test down. Bear bar, the bulls could not touch the moving average, and then we get a bear bar. It's a good short. So if you got out of a short, you'd get back short here again. And again, I'm talking in the perspective of always in. Here, big risk. It's reasonable to buy this, It is reasonable to buy this close for a swing, but I would not. I'd rather see a breakout, and especially a breakout above here to confirm it's a trading range. We're still making lower highs. So whether or not you got out, if you're a bear here, it looks like it's failing, you got to short again. Same thing here. Well, the bears, a lot of bears will sell the close, scalp out for a point, sell the close, scalp out for a point. They'll sell the moving average, scalp out for a point. Al does that every time, nearly. So I guess, so my point is, a way to tell that a channel is converting to a trading range and there's going to be a bull swing. See, when you have a broad channel, if you're aware of what's going on, you'll be alert for something a bit like this. And this is where you can make a great deal of points rather quickly. Spike, pullback, start of the channel is right here. So you have to pay attention, and one way to pay attention to sell signals, in this case, sell signals because it's a bear trend at the moving average. If it's a bull channel, pay attention to buy signals at the moving average. The longer the channel goes, the worse and worse signals will get for the bears because the lower and lower the probability will become. So sell signal, big risk, decent probability because it's we haven't had a second leg down. First time it touched the moving average, you should test this close. Here, less probability, but the bulls are not doing what they need to do, so still decent chance that we'll test down. Tight channel, break out of the channel. Again, the bulls probably needed one more bar to make it always in long. They failed, and they're starting to turn down. Notice what's happening. We're getting further and further away from the moving average. Here we got about, maybe a point, a few ticks above the moving average. Here we got about a point above. And this is another example. Traders sell the moving average, scale in, scalp out at the moving average. But notice what's happening. It's becoming harder and harder to short at the moving average. So you sell here, stop up here, sell here, stop up here, maybe here, sell here, stop up here. And then, do you sell below here? It's a micro channel. The first reversal down will probably fail. Terrible signal bar, decent breakout above. Arguably, it's a trend line break, so maybe we'll get a major trend reversal, a higher low or a lower low. Difficult. And that's a sign that we may be changing directions. So, take this a step further. Arguably always in long, but still, I'd get out if I was long here because we could easily test down. Definitely get out below this bar, maybe very short, but then again, you got to get out. And look right here. What's happening right here? Well, same thing. Bears will look to short. A lot of swing bears will sell at the moving average every time until it stops working. Sell here, sell here, sell here, sell here. They do it the whole way down because some days it just keeps going and it'll close on the low and you'll make a lot of money. Well, what about right here? Are you going to sell 14, 15? Probably not. You're already worried about here that we may get a higher low and not a new low. We did not get a new low. So you have to be thinking that we may test back up. Again, I don't want to spend my whole time on it, but let's take another bear example. Here's July the 7th. And you can see right here what's happening. On the open, you can get opening reversals and major trend reversals a lot quicker than later on in the day. We got a rally, test down, and then notice what's happening. This looks like a trading range, Trends that are strong only get 1 or 2 or 3 bar pullbacks, Look here, bear bar, one bear bar, one bear bar, one bear bar, one, maybe 2. Here, 4 bear bars. Just going to get rid of that. Pullback and then a test. Look what happened. Bulls who bought this high closer trap, and then we get a bear bar. So many bears and bulls wanted to sell at the high close, it did not trigger, and it's turning down. So you have to be thinking about two things. Number one, it's a gap up, breakout. Bulls will probably buy at the moving average. Why? Because that's what they always do. Well, what happened right here? Where are the bulls? They're not buying at the moving average. Bad signal bar, breakout, probably a little more down, bad signal bar, breakout below the moving average, another breakout below. We're probably going to break and make a new low of the day, so you sell. 5 consecutive bear bars, 6 consecutive bear bars. You can make the argument this is a breakout pullback buy, but you're probably always in short, and the first reversal up should fail, so don't buy here. And look what happened here. This is a reliable buy because it's the second failed breakout attempt of the low of the day, and it kind of looks like a trading range. So you have to be open to the possibility that this will be a trading range. We'll get back to the open of the day, and we may test all the way up here. But, once again, you still have to be open to the possibility that it's not in a trading range and it's a bear channel. So a lot of always-in bulls would get out here because it's the second failed breakout attempt of this rally. Right here is what I'm talking about. And you could have a deep pullback, and you may test all the way up to here. But never triggered. Got another bear breakout, arguably a wedge, 3 pushes down. A lot of bulls will get out here. However, what will bears do at the moving average? They will sell every time. What will bulls do? Most bulls sell every time at the moving average to take profits. So a lot of bears will get out, aggressive bulls will get in, and what happened? Found sellers. We're finding sellers. So at some point, if you're a bear and you took profits and you got out above this bar, you're going to look to sell again. The bulls are failing. Bear breakout. The bulls are failing. The bulls need a strong breakout because when you're trading counter trends, you do not want to stay in the market long, and you certainly want to get out if it doesn't do what you expected it to do or wanted it to do. So if I buy up here, I'm getting out for sure below here at the second entry short. Bears will start to sell. We got a bear breakout. First reversal up should fail, and this is the first reversal up. It's failing at the moving average. Again, failing at the moving average, turning down. But once again, notice what's going on. Take what I said about 5 minutes ago. The bears will sell at the moving average every chance they get because it's fair price, and they will do it all the way until it stops working. So sell at the moving average, sell at the moving average, here, all through here. Bear breakout, sell at the moving average, sell again at the moving average. Well, starting to form a trading range, getting a lot of pushes down. We're getting decent buying pressure. This is a reasonable buy, and arguably, if you buy here, buy more lower, you'll be able to, worst case, get out break even, which is right here. So pay attention to the sell signals at the moving average. And look at the sell signals down here. Low one short, probably going to fail, Here's a short, but not even at the moving average. We're probably going to get above the moving average, and we're probably going to get above this low, even though we did right here. So here at 1405, are you going to sell at the moving average? Well, I can tell you this. Traders who sold this close at the moving average got trapped. Once again, what about the stop entry bears that I've been talking about that will sell at the moving average? They never got the chance. They got the chance right here, and what happened? It's a micro channel. You've had a lot of bull bars. It's probably going to fail. Probably going to get a second leg up. It's arguably a wedge, 1, 2, 3, so expect 2 legs up. First push, pull back, second push. So, what's my whole point behind this? Why am I bringing this up on a day like today? Well, I'm bringing it up to prove the point that traders will always, the market always fails when it tries something for the first time. And by first time, I simply mean, the first time it touches the moving average all day in a gap up, it's probably going to fail and test up. Tight channel. The first time it breaks above the channel, it's probably going to fail and test down. So My whole point is it's not so simple as shorting below here and, we're automatically in a bear trend because this bar was always in long, so if we fall below it, you're going to find sellers. That's not the case. Trends evolve to trading ranges, and then trading ranges evolve to trends. It's a process. It's a market cycle. So, I don't want to take too much more time on this. I already have spent a lot. The bears need a bar like this after this bar. So they need a breakout, which they got here, and follow through, which should look like this. They don't get it. It's a failed breakout. It's a trading range, and we'll probably test out because think about it. It's not, most traders do not want to sell low. And if they short this close, they're going to, which is okay to do. Again, it's okay to do, but they're going to be very quick to get out. And look what happened. Traders sell this close at 27 even. This low was 27 even. So many traders wanted out that they were not even willing to get out at their original entry. They were willing to take a loss. And then we're starting to get consecutive bull bars. It's starting to form a small pullback, and it's a breakout. The first level fail. But, the one thing I said earlier was when you go sideways for an hour and a half, it's hard to escape that. So you may have a decent swing up for a few hours, but you're probably going to close the gaps. The bears will make money. It's reasonable to sell this high, sell more lower, sell more 4 points higher. So let's look at something. This high was 32.50. The high of the day was 36.75, just as I thought. What does that mean? Well, think about the math. There's always math in trading, so thinking about a structure of trade, I sell this high. Say I sold this high at 32.50 on this bar, and I sold more at 4 points higher at 36.50. And again, note the high of this bar was 36.75, so it allowed me to sell exactly 4 points higher. What's the probability if I sell this close and 4 points higher, or if I simply just sold 4 points above this high and I risked 4 points to make 4 points? Well, ask yourself, what's the odds at this price level, 36.50, right here? What's the odds that price goes back to here before it goes up to here? Well, it's probably 60%. It's even higher if you can scale in. So traders know this. That's why trending trading range days always close breakout points. Anyways, went sideways for quite a few bars, so it's probably a final flag. Arguably, it's high 3. The breakout above this is probably going to fail and have to come back into this range. And as you can see, breakout, okay, follow through, and then we just kind of started to melt down. So, where did the market, if you think about it, the market changed around here. Here we got a breakout and we went sideways, but we were going sideways to the moving average because a lot of traders wanted to buy at the moving average. Here, we still have not touched the moving average, but notice we're getting a lot of bear bars and bad signal bars for the bulls. So forming a tight channel, tight channels, what happens? The first reversal of the tight channel, so in this case the first reversal up, usually fails, and it did. So for the bulls, they see this as the two-legged trap, leg 1, pull back leg 2. This is low too short. By the way, you also have a wedge, first push, second push, third, so expect 2 legs down. We have 2 legs down. And then, so what's next? Well, bulls probably get out. They expect the first reversal up to fail. Maybe they bought here, but they'll get out probably here. What do? Well, a lot of bulls will buy again above here because it's not clearly always in long, but this is probably a trading range, so you have to think that we'll probably fall below obvious support. Obvious support is either this low or this low. It's arguably a spike, start of a channel, so we'll probably fall below it. And, well, We didn't. But one of the things you have to think about is when you start to channel down, when you start to form a trading range, is you have to be careful about buying too high without a breakout. And reasonable to buy above here. In all honesty, it's reasonable just to buy here and hold all through this and get out on this close, maybe this close. It's better if you can get out quicker, but hey, it's still okay to do that. Anyways, whole point. We got a breakout. We went sideways. We got trend reversal. Look at this whole day. It's a trading range, and trading range usually disappoints. If I can do this correctly. Look where we closed. Sorry, look at the low of right here. It's the exact midpoint of this trading range. So we had a trading range, we broke out, trading range, we fell back into the lower range. So this is a classic trading range day. So let's recap. Why is it a trading range day? It's a trading range day because we went sideways for like 12 to 15, 18 bars. We broke above it. We started going sideways again. So it's a trading range, trend, another trading range. That forms a large trading range, which we got here. So there you have it. My voice is getting really hoarse. I don't know how Al talks for the whole day. That'd be applaud anybody for doing that. Anyways, look real quick for any little more tidbits. Here we go. So another gap up, always in long, but this is really kind of what we had today. You buy above. A lot of traders will buy more at the low, and they'll get out here, which is what happened here. So buy this close, buy above it, get on lower at this low, scalp out, or buy here, get stopped out, buy again up here, or you buy here, buy more here, and you just hold. But anyways, whole point is when, it's subtle, but we're starting to channel up, and we're getting a small pullback, 1 bar pullback, Very tight channel. The first reversal down is probably going to fail, but this is such a tight channel that the stop placement's not easy. So maybe the stop goes down here, and if that's the case, this is probably a 50% pullback, which it is. So you buy here, arguably the stop's all the way down here. A lot of times traders don't want to risk that much, so they'll buy a 50% pullback. And once again, the first test of the moving average will fail. A lot of bulls will buy this close. So I know what you're thinking. You're thinking, why buy? It's got to be a scary bar to buy this close. Well, if you understand what's going on, bulls will probably buy at the moving average. They haven't been able to in over 3 hours. So we'll probably find buyers. And why not buy when the bears are at their strongest? So you buy. A lot of traders will scalp out. Other traders will simply wait for a stop entry, and they'll buy here, betting that we'll get back up to here, which we didn't. We just channeled up the entire day. So, and again, one thing to notice and be aware of is stop entries at the moving average. Here, not a great one, so probably we'll get a deep pullback, which we did. And here's a decent one that we buy. And really that, we're pretty much close on the high. And another note, small pullback trend days, they always look like they're going to reverse, and a lot of times successful small pullback trend days end up closing on their highs. So you need to be aware of them. If you are aware of them, you can do very well. Biggest point, gaps stay open. Gaps all through here. So anyways, that's all I've got. Hope everyone has a great day and evening and a great trading day tomorrow.